Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. December corn started the week at support and really never looked back. As we can see on the chart, 315 degrees or 338 and a quarter ended up being very good support. The market has marched up from there, and we just barely tested a volatility-based resistance yesterday. And in overnight trading, the market is down slightly, but we would not be surprised to see the market test just above the 358 and 3/4 number over the next couple of days. Obviously, we have Thanksgiving tomorrow and the markets will be closed, so we anticipate a lighter volatility and a bit lighter volume going into the next couple trading days. On Monday, volume should come back into the market and we'll get a better perspective in terms of direction. Here we can see where the confluence of the 337 50% retracement coincided with the 338 on the previous chart. That confluence gave us a very good support and the market has marched up from there. So key right now is whether or not the market will be able to actually break that 358 previous high that we talked about before. If the market fails here and gives us a couple sellers bars, then we could see a small move to the downside, which would potentially be another buying opportunity for us, with the market coming in and maybe the month of November or the end of the month giving us our low for the December contract. In all likelihood, we anticipate perhaps a slightly higher low coming in for the market to continue moving higher from current levels. In a similar fashion, we can see here that the March contract came in right at support at the 135-degree mark at 343 and 3/4. Support also touched volatility-based support. Market has since marched up, and the formation that we're seeing is very similar. The market has moved up from being oversold and barely got to being overbought and is not quite up there as of yet, and it remains to be seen if the market can make it up a little bit higher. If you recall from last week, we also highlighted that 50% retracement level at 347. And again, you can see the market really consolidated near this area and where it has now found a little bit of resistance in the aftermarket. In our last discussion, we talked about how the JN Beans contract really had a very tough time getting through this 986 and 3/4 number. We can see the market really consolidated here, and that was potentially a sign of accumulation of sorts. The market has come out of this zone or out of this region and bounced up, and here we can see it touching volatility-based resistance overhead. We have a potential target objective at about 1050, but the market is a little bit softer in the pre-market and aftermarket trading. So as we can see right now, going into the Thanksgiving holiday, we're probably looking at a smaller range trading day as everyone's looking to take off, etc., as far as traders are concerned. The projected time factor that we have for the JN Beans contract is on Monday, where we can see an intersection of several key transition lines. At these intersection points, we anticipate the markets can make potential turns. We can see that occurred in the past over here where the market made a nice high. Here the market actually came in and made a high as the market moved up into it and then dropped back down again. And so what we would expect here is for this soybean contract to potentially inch up higher going into Monday, at which point it could make a potential high, turn and make a higher low, and then it could very well continue higher. The discussion for the March beans contract is much of the same, although this contract has actually reached being overbought. It's slightly up there right now, and as you can see, the market has sort of responded in kind. Again, we're looking for the market to really be sideways, and we have a similar intersection point where we have resistance overhead with volatility-based resistance. At these current price levels, we believe that these are reasonable spots to potentially price, or at the very least implement some key marketing plans or marketing strategies where you could price a minimum price contract or different alternative strategies that we have in-house. But what is most important is for us to continue to watch the market at key levels and to not be too aggressive over the next couple days since we are in the throes of holiday timing. The wheat complex manages to find itself in a trading range still and has yet to be able to break out of it. Interestingly enough, you can see how much the market really respects our projected support and resistance levels. Here we can see the market came into support at the 270-degree mark, 392 and 3/4. After touching there and making a low essentially exactly at that area, the market moved up over the last 5 to 7 trading days up to the 180-degree mark, where it paused at about 413 or 412 and 3/4. The market has since moved down from there, and we're looking to see whether or not either of these levels can break. Now, what we'll be watching for in particular is if the market can break below 388 or if it's able to break above 415. Whichever of these it's able to do first should give us clear vision or clear insight as to the trajectory that we anticipate the market having going forward. Now, mind you, this is the December contract, and we'll be rolling over to the March contract for continued follow through to see where exactly the market could very well go. The volume here we anticipate to really dry up for this December contract, especially since we're going to have first notice day at the end of the month on November 30th. Here we find that the intersection point for a potential pivot or turn in the market ended up being pinpoint in determining a reasonable high for this market. The market moved up from this low up to our projected timeline that we discussed with you last week and has been down the last 2 trading days, or at least yesterday, as well as through a pre-market so far. So you can see how these intersection points really help us to give us potential wiggles or turns in the market and good spots for us to lever with regard to being able to give us spots to make sure that we do not allow the market to run away from us, to help us find areas where we can trail the market, not just in terms of price, but also in terms of time. 2 standard deviations below the point of control lands at 397 and a quarter. That's going to be a key support area for this market. So long as this contract's able to hold above 397 and a quarter, we believe that that would translate into continued strength going into the March contract. Here for the March week contract, we had our sinusoidal wave intersecting with overhead resistance at our 90-degree marker for 29.5. Here the market came up, found great resistance, and overnight trading is moving down a bit right now. And so as we can see here, the market has been very consistent with regard to our support and resistance levels that we projected out into the future. Below we have support down at about 415, and so it will be interesting to see how the market responds over the next couple of days. Again, we do have light volume, we do have the holidays, and so really we want to clear through the holiday before making any key determinations in terms of direction. Here we find another example of our intersection point telling us that we have a potential high coming in. We see key resistance just overhead in the market now in the pre-market selling off just a bit. Remains to be seen if this is going to be able to hold. It was nice to have an indication of this happening in advance to give us a good perspective on how to actually manage our positions. We will finish up with a look at our March crude oil contract. The December contract has come off the board, and current resistance right now actually came in right at the previous high that we can see highlighted on the chart. Market came in and had a very nice drop into key support at about the 78.6% retracement area. That happens to be a Fibonacci ratio that we use. The 61.8% retracement is where the market really took off. So you can see off of this 45.25 low, the market bounced, actually had a 2 or 3 day pullback, and then took off again where it found resistance at 50.76. What we're looking at right now is an anticipation of the OPEC meeting on November 30th that should give us clear vision as to whether or not they're going to be curbing production. The market is anticipating that the curbs will be put in, and so in light of that, we've seen a bit of strength. Depending on how those results come in, we could see the market turn back down again. Our cycles indicate that the market should have a bit more weakness, but that again remains to be seen. It's going to be a wait and see now as we wait for this important OPEC meeting at month's end. Thank you so much for joining us for our weekly market update. Have a great Thanksgiving holiday. Look forward to touching base with you next week.